Afternoon, everybody. Good afternoon, everybody, and welcome to this afternoon's webinar. My name is Victoria. I'm co-chair of ASCOR and also the head of sustainable investment at Brightwell Pensions. We're going to be recording today's meeting, and fingers crossed it works. And if it does, this meeting will be going up onto the TPI website. So please head there if you miss anything, but also head there for further information, and also www.ascor.org for any other of your ASCOR needs. So today we're going to be going through the tool and its findings. But I think what's particularly special about today's meeting is that we're not only going to be joined by leading sovereign debt investors, but also the German Finance Agency and the Uruguayan Ministry of Economy and Finance Agency. I think so many of these conversations often happen on the asset manager and asset owner side, rarely with the other side of the table, sharing their views and experiences. So I really want to say thanks to Alexandra and Herman for being here today. So after my piece, we're going to be hearing from two colleagues from the TPI Centre, Antonina Scheer, who's a research project manager and a driving force behind this project, and Johannes Honeth, who's one of the analysts, also equally a driving force. They're going to be walking through the framework and the country assessments. It's going to be very interesting. Then we're going to be hearing from Claudia Goldmeyer, who is Managing Director of Singapore for Colchester Global Investors, where she manages global and emerging bond portfolios. Joining her will be Esther Law, who's Senior Investment Manager at Amundi, where she is also an emerging markets debt and responsible investing lead. They're going to be talking about how they plan to use ASCOR as fund managers. As I mentioned, we're delighted to be joined by Alexandra Beust, Head of Investor Relations and Green Finance of the German Finance Agency, and Herman Camil, Head of Debt Management Office from the Uruguayan Ministry of Finance and Economy. They're both hugely influential in this space, and they're going to share their opinions on ASCOR. Finally, we'll have time for Q&A with my co-chair, Adam Matthews, who is Head of Responsible Investment at the Church of England Pensions Board, and he will be chairing that section. So please store up all of your many questions, which we hope there will be, for then. Next slide, please. Fantastic. So ASCOR, another acronym, but this one's quite different. It stands for Assessing Sovereign Climate-Related Opportunities and Risks, and it's an investor-led project. See, many of those investors that have contributed significantly to this project can be found in that blue box on the right-hand side. And I think what's exciting about this project is that it's really been done to assess the progress that sovereign issuers are making on climate change, the impacts of climate change on their countries. Now, because it's investor-led, this whole tool was created to inform investment decisions on sovereign bonds, and with explicit focus on climate change. So not a high-level ESG rating, but actually something much more specific on climate change. And this work has undergone substantive and significant consultation and input, not only from investors, but also from sovereign issuers. And this is, I think, what's really key to making this tool special. As I said, if you want to find out about the methodology and the results, head to the TPI website or ascorproject.org. Next one, please. So what's so special about ASCOR? There's other stuff that's out there. Well, this is really tailored to investors' needs. And it really brings a unique value to assessment of financial systems. It's comprehensive. The framework is really covering a really large topic of different factors that are important to how countries are managing climate change and then how investors can consume that. It's financially relevant, as I've already said, because investors want to understand this information because they want it to integrate it into their investment making decisions. And finally, we think it's going to be really useful for engagement because it can also help inform investors' dialogue with sovereign issuers, but also help those issuers with a way to communicate what they're doing and their progress. Next slide, please. Now, we've been working on this for quite some time, since 2021, and we've gone through several iterations and phases. And right now, we are in the final phase on the right-hand side. So we've done our assessment of 25 countries. That's what's going to be discussed today. But the plan is now to expand that analysis to 70 countries. And in 2025, out to 100 countries. So we're really not keeping this focus on just one set of countries. We are going global. Next slide, please. Right, I'm now handing over to Antonina, who's going to go through all the detail. Please pay attention. She's going to make some really excellent points, and handing over to Antonina. Thank you.
Thank you so much, Victoria. So my name is Antonina Shearer. I'm a research project manager here at the TPI Centre based at the London School of Economics. Everything that I'll be presenting here will be fairly brief. It's just an overview of the framework as a bit of a refresher, but you can find much more detail if you look for the ASCOR methodology note, which is available on the website that Victoria mentioned at the beginning, ascorproject.org. To start, we thought it would be useful to lay out the design principles that have guided the development of the ASCOR framework over the past 2 years. So the first 6 principles here were with us from the very beginning, and the 7th design principle was added as a result of feedback we received from the public consultation held last year. So firstly, all assessments under the ASCOR framework use exclusively publicly available information. This is to create a tool that drives transparency and disclosure. Second, the framework is built as binary yes or no questions or indicators, as well as quantitative metrics to sort of provide a bit more detail on particular indicators that are just binary. Third, the methodology and the assessments and the sourcing we use are all transparent. Fourth, the way that the framework was built was done in such a way that we avoid any unnecessary additions to the reporting burden of sovereigns. Fifth, the focus is at the national level. This is to align with the investor ask from the very beginning to provide an assessment of sovereign bond issuers. Sixth, we have an important principle here, which is the principle of common but differentiated responsibilities and respective capabilities. This is often summarized as the fairness principle. It's something that's enshrined in the UN Framework Convention on Climate Change, as well as in the Paris Agreement. And I have the next slide to go into a little bit more detail on exactly how we put this principle into practice. The 7th design principle we have, as I mentioned, was added based on the consultation period. And this is that everything we have and everything we show within the ASCOR results focuses on how countries are performing on the management of climate risks and opportunities. And this is to focus on where governments have agency, and this is very much to enable ASCOR to be used for engagement and to enable countries to improve their performance over time. So just delving a little bit more into this principle of common but differentiated responsibilities, I'll start by mentioning that what this means in a nutshell is that although all countries need to take part in climate action, this should be differentiated and sort of contextualized by both historical emissions and responsibility for causing climate change, but also the different levels of development that countries have and how that affects their ability and capability to invest in climate solutions. So the way that ASCOR puts this into practice is through income group exemptions. We categorize the countries that we assess using the World Bank income groups, and we assess high-income countries against the highest standard, against all indicators that are relevant to them. Middle-income countries, because we must recognize their development priorities, but they also have an important role to play in the transition, are assessed on all areas, but are exempt from the highest ambition indicators. Finally, low-income countries are generally very minor contributors to global emissions, and as a result, they're fully exempt from 3 specific areas within the framework that focus on mitigation policy. One last thing to note here about this fairness principle is that the ASCOR results that we provide are not aggregated into a single country score. And this is really to ensure that the output that we provide gives a really nuanced and meaningful picture of how sovereigns are managing climate risks and opportunities, rather than aggregating all of the different types of practices that they may be doing into one result. The reason this fits in with the fairness question is that if there is any income bias, a single country score creates a risk of capital flight from emerging markets. Before we go into the results, which my colleague will be presenting, we thought it would be useful to just get a high-level bird's eye view of the framework, and you'll be able to see the specific indicators that feed into each of these areas in a moment. So with the bird's eye view, we have 3 pillars. A first pillar that looks at emissions pathways, both historical trends and forward-looking targets. We have a pillar that looks at climate policies, which cover policies towards mitigation, adaptation, and just transition. And finally, we have a pillar that covers the broad theme of climate finance from a few different perspectives. One thing we thought would be useful during this webinar is to map onto these different areas something that may be more familiar and intuitive to some investors, particularly those that use the net zero investment framework that was developed by the IIGCC. So these are not exactly word for word mappings, but it may help to interpret what each of the areas of the ASCOR framework is measuring. So the first area that we have is emissions trends. This really gets at the question of emissions performance and climate performance. So how are emissions decreasing over time? Is there really progress towards targets, and are the policies that are in place effective at actually lowering emissions? Complementing this backward-looking analysis, we have an assessment of forward-looking targets, and this tells investors about the level of ambition that different countries have in a very comparable way. The biggest sort of theme that we have amongst the whole ASCOR framework is looking at this question of implementation. You can also think about this in the words of the corporate perspective when you do corporate assessments of climate, which is the decarbonization strategy. So all of these different areas tell investors a little bit more in detail how are countries going to implement their targets and their adaptation ambitions. Finally, we have these two areas within Pillar 3 that look at the transparency of how countries are costing, how much their targets, their transition plans, and also their adaptation plans will cost, and also being transparent about public expenditures and what's being spent on climate action. Very briefly, this is just to outline a little bit more the structure that we have of the ASCOR framework. So as you just saw, we have 3 pillars, each of which has a number of areas. And within each area, there are either a group of indicators and sometimes also some metrics, or sometimes only metrics. As I mentioned, we don't provide a country level score, but we do provide area level results. That's sort of the maximum level of aggregation that's provided through the ASCOR tool. And how this is done is if all of the indicators within an area are yes, then that area is assessed as yes. If there's a mix, then it's partial. And if all of the indicators within the area are assessed as no, then that area result is no. This is to help you interpret the results that we'll come to in a moment. Very quickly, just to give a bit of a visualization, this is how the first pillar assessments look if you were to plot them out on a time series. So you can see the country's historical emissions, you can see their targeted pathway based on their NDCs set for 2030, and we compare these 2030 targets to both a national 1.5 degree benchmark, which is based on least cost modeling of a 1.5 scenario. And we also provide a fair share benchmark, which allocates the 2030 carbon budget to different countries based both on their historical emissions and their income per capita. And this very concretely puts into practice that principle I was mentioning before of common but differentiated responsibilities. The last thing I'll say before handing over to the results is that we have here just a screenshot of what the ASCOR tool looks like. So this is if you follow the link that Victoria mentioned at the beginning. There's a button at the top that says access the ASCOR tool. And if you click there, you'll be brought here. This is hosted by the Transition Pathway Initiative website. And you can find at the very top of this page the sort of green button that says download ASCOR data. This enables any users of the ASCOR tool to see everything that we publish, all of the results of the indicators, of the areas, of the metrics, and also the sources. Then you can scroll down, and these bubbles here are all the different countries we assess on each area, and you can click on a given country to see their country webpage. You can also use the drop-down menu to find a country. And the last thing to mention here is this little button at the top called methodology that will bring you to the methodology note where you can find a lot more detail about all of this. So without further ado, I'm happy to hand over to Johannes.
Yes, thank you, Antonina. I will quickly guide you through the results of our first assessment cycle. But before so, I wanted to introduce you quickly also to the scope of our initial assessment on the next slide. If we could switch slides, perfect. So in the initial assessment round, we covered 25 countries, and we think we assessed quite a good mix of income groups, of different climate risks, physical and transitional, but also policy-making systems and geographies. In the next iteration, this year, we plan to cover 70 countries, but right now we already have included 70% of global greenhouse gas emissions and around 50 to 80% of the main sovereign bond market indices. I will sometimes refer to specific countries, but otherwise keep it rather general. The data is already out there. And if you're interested in specific country cases, go and visit a tool on the TPI Centre's webpage. And now on the next slide, you find an overview of our areas and the share of countries being assessed as yes, no, and partial on each of them. And overall, we observe that the overwhelming majority of country and area results are partial. This can be explained by the design based on the structure of ASCOR, but it also shows that most countries have at least started the climate journey in a serious way. Strong areas can be found when looking at the areas that tend to be rather procedural or actions that concentrate on setting up a foundation for climate action, but do not necessarily reduce emissions without further steps. As for example, target setting, making a framework law, but also disclosing budget spending on climate. Weak areas, then, on the other hand, can be found when we look at areas that really centralize taking actions by implementing specific sectoral policies or undertaking real investments. We can see that at ending fossil fuel subsidies, practical sectoral regulations, but also the financing towards the global south. But I will deep dive now into these areas over the next 13 slides. And this kind of slide you will now see for quite some time. It presents the title on the upper left of the area, and then you will find some area level observations underneath. And on the right side, we present bar charts for every indicator showing the percentage of countries assessed as yes. I will sometimes refer to these bar charts, but to not exceed the scope of this webinar, focus on overarching remarks. So we assessed emission trends of countries to give investors an idea about the performance of countries and their actual emission reductions and how they relate to 1.5 degrees. We observed that over the last 5 years, half of the countries we assessed have achieved emission reductions on a range of metrics. We assess consumption emissions, production emissions, look solely at land use emissions. We look at absolute emissions, but also include GDP intensities and per capita intensities. In the end, none of these emission reductions are steep enough to align with a cost-effective 1.5 degree benchmark. And you can see that in the middle bar chart that is completely red and indeed shows that none of the current reductions, if they are actually reductions at all, are aligned with a 1.5 degree benchmark. On the next slide, you see the results of our 2030 target section that we assess as the central aspect of the Paris Agreement and enshrined in the UNFCCC process. It's also really key to understand the climate ambition of countries, of course. And we observed that almost all countries have a 2030 target, but none is aligned with the cost-effective 1.5 degree benchmark, and only a few of all 4 have targets that are aligned with their 1.5 degree fair share allocation. That countries are doing worse on the alignment assessments is indicated by the last 2 bar charts that ask for the alignment of a target with 1.5 degrees. On the next slide, we are then switching from medium-term commitments to the long-term ambition of countries by looking at net zero targets. We found out that most countries have committed to a net zero target, usually by 2050. There are 2 main exceptions. One is Barbados, who has a net zero target by 2030, and Germany's net zero target is by 2045. I think one interesting observation is that less countries have set net zero targets than 2030 targets. And one further thing I should mention here is that we conducted the alignment analysis only on high-income countries here. As Antonina mentioned earlier, we have income exceptions for higher ambition indicators to resemble the principle of common but differentiated responsibilities. But you will see this through the areas marked with a star in the text and when the accompanying number is deviating from 25. Exactly. And then on the next slide, we look at climate legislation, which we assess as an important way for countries to set a foundation for further implementing climate action. We observed then more than half of the assessed countries have passed a framework climate law, and most of these laws specify also accountability elements. On the next slide, thank you, we look at carbon pricing, which we assess as it's a central mitigation measure to change the cost of emitting and thereby encourage decarbonization. We found out that while carbon pricing systems are increasingly common, only a few of them cover at least half of national emissions or set a price high enough to be aligned with the Paris Agreement. To put it in a nutshell, first steps are definitely done, but further work needs to increase the coverage and the ambition of these systems. On the next slide, we turn to the largest contributor to climate change, fossil fuels. This key issue from COP28 is really crucial and considered important by investors, and we assess here the production and the subsidies regarding fossil fuels. We observed that within our whole pillar 2, countries perform worst on phasing out fossil fuels. There are marginally better results on committing to phase out subsidies compared with ending fossil fuel production. And you can confirm this by looking at the bar charts on the right. The share of yeses is generally quite modest. The two upper bar charts are resembling the subsidies, and the two at the bottom, the production. And specifically, we ask here for coal mines and upstream oil and gas projects. On the next slide, we then turn to sectoral transition. It's the last section on mitigation, and here we switch from the economy-wide level to the sectoral level and focus on a range of policies related to energy, electricity, but also land use. It's a central area of implementation, really, that shows investors how countries are really implementing their national targets. We observe that half of the assessed countries have suitable multi-sector climate strategies. And although most strategies include sectoral targets, they often lack, in the end, concrete policy actions to implement those targets. Striking here is probably the bad results in the electricity part. That's the fourth indicator or the fourth bar chart. I should say here, though, that we use regional 1.5 net zero deadlines for the electricity sector and especially 2035 for high income countries. So it's a very ambitious indicator which could explain these observations. On the next slide, then we turn to adaptation, which we assess to understand how countries are managing physical risks. We observe that most countries have published national adaptation plans, but only half of these countries regularly assess the climate risks they face. And also even fewer countries monitor and evaluate the implementation of their national adaptation plans. Striking, I thought, were here maybe the two indicators at the bottom. It seems to be very common to have a multi-hazard early warning system, but less common to be part of a sovereign catastrophe risk pool. On the next slide, then, we see the results of our just transition analysis that we assess to also capture the social dimension of climate action. We found out that just transition policy is an area of emerging practice, with 8 of 25 countries having established government commissions responsible for just transition. But also in general, looking at the right side, we see that for all of our 4 indicators, there's a substantial share of countries being assessed as yes, but there's still some scope of work to be done within all of these 4. On the next slide, we see the assessments regarding international climate finance. And this is really important to consider, as international finance is still lagging, but it's actually key for meeting the Paris Agreement to have financial flows towards the global south. In general, we see here that targets are more commonly distributed than the actual contributions, probably not that surprising. And I also should admit that if high-income countries follow their targets, we will see a rising share of yeses also for the contributions here as well. On the next slide, we look at the transparency of climate costing. This shows investors if a country went through the costing of its nationally determined contribution, NDC, or its national adaptation plan, NAP. And this demonstrates that the country took the next step towards implementation of its NDC or its NAP. And we observed that only few countries are transparent on the costs of implementing the NDC or the NAP. And we should though say that such disclosure may require capacity building in certain countries to estimate future costs, which could explain why numbers are that low in this area. On the next slide, we turn to our last area, the transparency on public expenditure towards climate that we assess as it underlines a certain level of accountability. And we observe that basic disclosure of climate spending is increasingly common practice. The reason for that could be that governments are accountable to their citizens on how they spend public funds. However, climate budget tagging, the systematic process of identifying and monitoring climate public expenditure, is less commonly applied. Before I hand now over, I want to quickly summarize these findings for each pillar. We, in the end, observed common patterns here. In the first pillar, we observed a large emission gap due to a lack of ambition of countries' targets and trends. Within the second pillar, we found an implementation gap with insufficient sectoral policies and a lack of commitment to phasing out fossil fuel subsidies and production. Last but not least, the third pillar demonstrated the international climate finance gap, which high-income countries need to work towards closing. These observations are consistent with other research work. We include the links here. That's, for example, the emission gap report from UNEP for you to further explore. The slides will be shared after this webinar. But yeah, if you're interested in more results, especially the quantitative results, please visit the tool, which you can find on TPI Centre's website. And by that, I'm closing the results section here and hand over to the market participants that are listed here on this slide, starting with Esther Law. Maybe you can quickly introduce yourself and later then pass along to the other speakers. Thank you.
Sure. Thank you, Johannes. Good morning, good afternoon, and good evening to all of you. Thank you so much for dialing into the webinar. Indeed, you have had a very solid session from Alina and also from Johannes. So I am the Senior Portfolio Manager and also responsible investment lead for Amundi Asset Management. I have been involved in the development of the ASCOR project since the very beginning for the past 2 years. It has been really an amazing journey to work with a group of professionals from all different backgrounds, including asset owners, asset managers, climate experts, investor networks, and also some of the MDBs who are, equally passionate in bringing about a standard which we all can use and trust to assess sovereign climate risk. So bringing back, ASCOR and asset management from a senior PM perspective, and with Amundi being a member of the Net Zero Asset Managers, it is paramount for us to have a good framework to formalize the measurement of net zero alignment, both from the quantitative and policy perspectives, to enable us to reach our global net zero objective by 2050. to better understand the relevance of ASCOR for us, it is useful to highlight that for net zero asset managers, there are 3 endorsed target setting methodologies, and they are Paris-aligned investment initiatives, net zero investment framework, so-called NETZIF, a science-based target initiative for financial institutions, and finally, net zero asset owner alliance target setting protocol. So ASCOR specifically address investors' ability to implement NETZIF by providing a very transparent tool, as Lina already highlighted, in the sovereign space, which we don't really have at the moment. So specifically, the ASCOR, the way that the ASCOR pillar are designed, which actually have been through a lot of discussion during the design process, as per earlier slide by Lina, is actually can be mapped back to a lot of the NETZIF criteria. Specifically, ASCOR is able to provide a lot of data that nearly cover all the NCIF criteria, noticeably the asset class criteria of ambition, emissions performance, decarbonization strategy, and just transition, as per Johannes' previous discussion. I would also like to highlight that the ASCOR is the only sovereign assessment framework developed with and also for investors, and has design features especially to set up to enable sovereign engagement and policy advocacy, which is also one of key components for NETZIF. In this context, I'm very excited to finally have a structured, fair and free tool to assess the net zero progression of our sovereign debt investments, with the support of better data availability, as well as the design of the ASCOR framework. We can then integrate and thus further enhance our ESG investment process in the sovereign space. Finally, I should also mention that ASCOR also helps to standardize the reporting requirements and indicate to sovereign issuers what investors are looking for from them. And leveraging on this will be the anchor of engagement discussion, either bilaterally or collectively with the sovereign issuers, and as well as promoting the development of the sustainable bond issuance. So let me pause here and pass the floor to my peers, Claudia, to share her thoughts. Thank you.
Thank you very much, Esther. Claudia Gollmeier, I'm representing Colchester Global Investors, an asset manager, and I've also been with Esther acting co-chair for the ASCOR project since the beginning. Just adding on to what Esther was mentioning, additional issues the broader investment community is grappling with, and how the ASCOR framework might be able to help and overcome some of those issues. So the issues I've been thinking about are the regulatory reporting challenges we're all facing, identifying credible KPIs for labeled bonds, and also we've got this missing sovereign engagement tool. So let's start with one of our most favorite topics, the reporting requirements. Investors like us have been asked more and more to disclose on their portfolio holdings. Is it either for reporting or regulatory requirements? And we can think here of the EU Sustainable Finance Disclosure Regulations, also known as SFDR, or also asset owners who have signed up to net zero commitments are asking for further disclosures. And that's on the basis of what we have heard before already, is we don't really have a sovereign disclosure framework to date. So hopefully ASCOR can come to the rescue here and help with some of those indicators and provide some disclosure indicators for regulatory reporting purposes for asset owners, but equally asset managers might find it useful to integrate some of those factors within their sovereign bond analysis. Staying on the investment side, as Esther already alluded to, we have seen more sovereign issuers coming to the market with labeled bonds. But however, investors have been finding it sometimes a bit challenging to determine if these chosen indicators or KPIs, for example, for sustainability-linked bonds, are robust enough. And therefore, again, ASCOR could be quite useful as some of these indicators, if issuers would be willing to use those, as they've been independently assessed within their framework. And I think that would be a win-win for both investors and issuers, as the more credible KPIs would be used and would be therefore attracting more capital flows into these bonds. And obviously investors like us would feel more comfortable with such independently assessed indicators within the analysis and for investing purposes. And I'm sure we'll be hearing more about this from our issuers on this webinar later on. And last but not least, ASCOR has been created to inform sovereign engagement in a consistent fashion. And just before we go on that, I just want to make sure we're all clear. Sovereign engagement is very different to equity stewardship. The sovereign investors do not have voting rights. And sovereigns, responsibilities lie clearly with their citizens. But that doesn't mean us investors cannot engage. And we have been engaging with issuers for many years, either, as Esther said, individually or collaboratively. But the difference is what we have been engaging with in the past have been much more around governance indicators or government's budget developments, structural reforms. And hence, when it came to the topic of climate, that has been a bit of a challenge in the past, simply because we had the lack of information or the inability to frame this conversation. And that's why it's been very helpful as well, having the PRI launched in September 2022, a pilot project on collaboration on with institutional investors, and seek to engage with the Australian government on climate change risks and opportunities. As a member of this collaborative investor engagement group, ASCOR indicators will certainly be very helpful in shaping the Australian government engagement work further. And we are looking very much forward to translating or transforming those indicators into much more broadly focused engagement frameworks beyond the Australian work. So I hope with some highlighting some of those issues the broader investment community is facing and how ASCOR can help overcome some of that. You found that very useful. With that, I will be passing on the baton to Alexandra Beust from the German agency.
Hi, thanks, Claudia. Hi, everyone. Thank you for having me to speak here today. I'd like to touch on 3 points, really. Why is ASCOR, in my opinion, useful for my work? And I should have said I work for the German Finance Agency, which is the debt management office of the Federal Republic of Germany. And we were one of the group of the first sovereigns that were assessed by the ASCOR framework. And I'd like to say why is this useful for my work, and what were my experiences with dealing with the ASCOR team and the assessment, and also finally, why do I think this is important? Why do I support it? So this is a useful thing for me, especially in my work as the person speaking to investors and telling them why to invest into German government bonds, because it's a very transparent methodology and framework that gives me a very good idea of what is important to investors, what factors, what KPIs, what policies are important to investors when assessing the climate change performance of us as a whole country. And it helps me understand this in a very efficient way, to be honest, because otherwise I would have to speak to every investor individually, and I would have to try to get an idea of individual scoring or rating or internal flagging models that investors have, or external ratings they use for sovereigns, which again tend to be quite intransparent for us as an issuer, and there's quite a lack of dialogue with us as sovereign issuers. And therefore, I think this was very well done by the ASCOR team, is to reach out to issuers very early on, discuss their methodology with us so we understand it better, and also give us the opportunity to give feedback on results. Was, in my opinion, very well done. So we can follow very well how we are assessed and why the results are what they are, and how we can improve, and where we, in at least from an investment community point of view, where we need to improve as a sovereign to get a better result. While working or actually especially in the feedback round, of course you find some challenges as well. Our major challenge, to be honest, was an administrative one. So as a sovereign, for other sovereigns that may be dialed in who haven't been assessed yet, you should plan quite a lot of time in order to look at the first results and give feedback of them, because there's just usually for sovereign many different ministries and parties, departments involved in looking at these results, and to involve them all takes quite a lot of time due the usually quite hierarchical setup of sovereign governments. From the results themselves, we didn't I can't really give any negative feedback or any negative examples. I think we only had one area where our national data was differed largely to the ASCOR data, which was LULUCF, the land use, land change, and forestry. Numbers did differ quite from our national numbers, but that was the only area where we kind of saw a larger discrepancy to how we see ourselves. And obviously also it was very comfortable to have all the assessments done by the ASCOR team without us having to report and deliver figures, but all the work was done. It was done really thoroughly, and we couldn't actually ourselves add that much or find that much that that the ASCOR team didn't find themselves. So all in all, it was quite easy and comfortable to work with, and this all helps me to get into a dialogue with investors regarding how they see us as a country, regarding especially in this case climate change factors, but also other ESG factors. And why do I think this is important? I'm a firm believer that ultimately and in the long run, also in the, not just in the equity market, but also in the fixed income market, where we are also regarding sovereigns, ultimately it will play a role in everyone's investment decision, how a country performs regarding sustainability factors, of which this is of course just a small part, or an important part, but just a part. But I do think this will be an important decision-making factor in the future. And I believe this was also mentioned as one of the goals in the beginning of this webinar. I do firmly believe that we should, just as we do as consumers, when we buy goods, we look at, or a lot of us look at, is it produced organically? Is it fair trade? Is it shipped CO2 neutrally? Are animals protected? All those kind of things play a big role for us as consumers nowadays. And we are willing to pay a higher price for an organic grocery versus a non-organic grocery. I'm paying a higher price for fair trade coffee versus normal coffee. All those kind of things play a role in my decision to buy a product or not, and I'm willing to pay a different price for it. And I do believe that ultimately for asset owners, this should also be a factor, or ESG factors in general should play a role in the price discovery when they invest into assets, and therefore ultimately steer capital, much needed capital, into sustainable investment, into all the investments that this world needs to fight climate change. And what better way to make issuers move and get better and perform better than to tell them, look, if I'm willing to finance your project at a lower rate than if it's a non-sustainable project. So I think this is where we're ultimately going, and I think it's something that is still developing. And currently, we have a lot of label products to kind of go into that direction, but it is something that should ultimately also philosophically be a part of our thinking and of how we act in making a decision regarding our investments. And therefore, I encourage everyone who's part of this big value chain of an investment decision, from the asset owner who makes the ultimate decision, but also, of course, asset managers, issuers, rating agencies, and so on and so forth, to support projects like this that make one of these important factors very transparent to everyone at no cost. Thank you. And with that, I'm sorry, I probably have to pass on to my colleague from who's here from Uruguay, to Herman Camil.
Thank you, Alexandra, and good afternoon. My name is Herman Camil. I work at the Management Division of the Ministry of Finance of Uruguay. First, I want to thank the organizers of the project for taking our country into consideration as being part of the first phase of ASCOR. We are proud to have been selected. The ASCOR tool provides an independent assessment for a cross-section of countries on their climate frameworks, policies, and targets in place, but also on the ensuing mitigation and adaptation risks that our countries face. It was mostly developed with the investor community in mind, yet it also helps countries like ours identify opportunities to chart a path towards sustainable sovereign financing strategies. In this sense, I think it's a strong foundation to promote the dialogue and engagement between issuers and investors. It's almost like a coordination device between supply and demand for sovereign bonds. In our view, we think the tool is very well thought out. It has been crafted after an extensive, detailed public consultations. It provides very transparent, rigorous, and independent analysis, and it's also based on recent data. And the interface is very user-friendly and attractive. We had a chance to interact several times with Esther, Carmen, Claudia, and Victoria since December 2022, mostly through Victoria Lucio from our debt management division. So we are glad to see when we saw it was brought to life back in December. So in what follows, I will touch upon some of the key themes underlying the tool and how it connects to the key features of Uruguay's sustainable financing strategies. I want to highlight the practical ways in which it has helped us so far. And I will conclude with some suggestions on how the tool would be further strengthened, but without detracting in any way possible from the value it has. So back in October 2021, when Uruguay was chairing the World Bank IMF Development Committee, we first advanced the idea that we needed to develop new international climate finance instruments that embedded positive financial incentives for countries to contribute to global public goods, such as, for example, mitigating greenhouse gas emissions or nature conservation. So aligned with this vision, in October of 2022, we issued a sovereign sustainability-linked bond that directly linked our financing strategy and cost of capital to two key performance indicators: reducing the intensity of greenhouse gas emissions in the economy and preserving the area of native forest. The sustainability performance targets we use for these KPIs came directly out of our NDCs, and we set 2025 as our target date. So the goals are very demanding, and the deadline is also ambitious. The bond included a breakthrough step-up, step-down mechanism, as it's known, and as part of our design of the SLB, Uruguay accelerated the reporting of our greenhouse gas emissions from a biennial to annual frequency in line with the standards of most developed economies. Additionally, the reporting and external verification will continue over the life of the bond and past the trigger date. So given the purpose and design of our financing strategy, let me highlight 2 or 3 key areas that connects directly with the ASCOR project. The first one, transparency and accountability. In our view, this is the real hard currency of the bonds, transparency and accountability, and ASCOR places a lot of emphasis on those key issues. So for investors that want to buy an SLB or are tracking an SLB, it provides clear markers that are easier to track and report to assess what is the environmental impact, to demonstrate the level of ambition of a country, what is our direct contribution to global climate efforts. And of course, as they monitor progress, it helps on pricing our own bonds. Now, for investors who have confidence in the performance tracking mechanisms of an SLB offering, including the one from Uruguay, they need to be assured that the data pipelines feeding these KPIs are tamper-proof, that they are durable, they are accessible online, and they are open to scrutiny, particularly across administrations. So in particular, the Pillar 1 of the ASCOR project is very helpful in monitoring the progress on these mitigation goals and how the ambitious targets are said to be accomplished by looking at the evolution of KPI 1. So it's put in front and center accountability, transparency, and reporting on progress towards our environmental goals. The second theme underlying, we think, ASCOR is governance. For putting together an SLB like the one we did for Uruguay, we were spanning the whole greenhouse gas emissions of the economy and all native forests across the territory. So necessarily we had to interact and galvanize and coordinate with 4 different ministries: the Ministry of Finance, the Ministry of Industry and Energy, the Ministry of Environment, and the Ministry of Agriculture and Livestock Production. And trust me, it took a lot of coordination and persuasion to put together a credible framework and then to monitor progress over time. So the information that is compiled under Pillar 2 of ASCOR, climate policies, I think helps to reflect on that strong interministerial coordination and the governance arrangements that are critical to ensure a timely and reliable provision of the data and how you communicate regularly on progress with investors in achieving the sustainability targets. We tend to think, or we like to think, that in putting together this kind of bonds, the most of the focus tends to be on the E part of ESG because it's environmentally focused. But there's a lot of G inside of this ESG bond because it requires a lot of governance in putting together this whole project. And the third theme that I think is important when it comes to ASCOR is the focus on commitments, particularly on ambitious commitments. And if you think about the SLB for Uruguay, in essence, what we are doing is we through this bond, we are making our environmental commitments under the Paris Agreement financially binding. So meeting or not our Paris agreements will have financial consequences. And there's a lot of focus in the ASCOR project on the NDCs of each country. So there's a very much aligned with the idea of having Paris Agreement goals embedded in your framework. So this is also very important because in achieving those goals and setting the policies, there needs to be a lot of coordination across ministries. So now on to the second part, where some things where we think it can be improved or further strengthened. The first one, ASCOR project, the ASCOR tool has a very big focus on fossil fuels, energy efficiency, and energy intensity, and understandably so, right? Now, for some countries, and that includes Uruguay, our greenhouse gas emissions, the nature is very much skewed towards the carbon emissions tied to agricultural production, mostly methane emissions and N2O. So as a food supplier to a growing world population, the challenge Uruguay has is to boost our livestock production, which is an integral part of our economic fabric, but at the same time reducing the intensity of methane emissions. So as the ASCOR team is poised to expand its set of countries included in the project, we suggest to widen the concept of carbon emissions beyond carbon dioxide and include more explicitly other sources of greenhouse gas emissions. So that would be our first suggestion. The second suggestion, on the frequency of data provision. Now, transparency is very much also tied to the frequency or the ability that investors have to be continually monitoring the evolution of the KPIs. And one of the big efforts we put into the SLB was to make the data availability more often, more frequent, and to reduce the time lag compared to the observation date. And that's in itself a way to embed market discipline into the bond, is to be able to hold yourself accountable more regularly. So it brings market discipline to completion to be able to increase the frequency, so that on data reporting and the lags. So we think this could be 2 areas where it would be interesting going forward to put more emphasis. And finally, as a third suggestion, which again doesn't belittle on the effort that you guys put, is the ASCOR project incorporates one of the item lines is the concept of protected areas as part of total land, and we think that's very much well suited. I think it could also benefit from incorporating the ASCOR project more focus on biodiversity, and here I link it with our second KPI, which is our zero deforestation commitment on the native forest area. So to conclude, To achieve the commitments, all stakeholders, countries, meaning sovereign issuers, asset managers, asset owners, financial institutions, we all must have an open dialogue. And we must hold each other accountable on the pledges and on the actions we take, because we are all looking towards a common goal, which is the transition to a low carbon economy. Because at the end of the day, investors want to know that they are having a real impact on issuers, and issuers want to be sure that their efforts and their progress is adequately recognized and even rewarded. And this fundamentally requires having consistent, up-to-date, and climate data that is macro relevant. So the ASCOR tool is a big step forward in this direction. Thank you, and handing over it now to Adam to moderate the Q&A.
Brilliant. Thank you very much, Herman. Thank you very much, Alexandra, and thank you very much, everybody else that has spoken so far. So this is the question and answer session, and you have been busy submitting many questions, and the aim is to do them all. If we don't get them all covered, we will put answers to them up on the website, but I think with this super duper panel we've got here, it's going to be quite possible to cover them. I would ask our responders to keep their responses short and punchy, but some of them I suspect are going to be a little bit more technical. They sort of fall into a mixture of technical questions and some more principal questions, but we'll work through them and see where we get to. And just before I do, just really appreciate the comments from the two issues from Germany, from Uruguay. Both of those really thoughtful comments, really helpful in hearing the feedback from you, and also in helping us shape the evolution of this tool, because it is the first iteration and it will evolve. But really welcome the response and the usefulness that you see in it, but also the areas that we can further enhance it. And really a message to everybody: look at the tool, engage with it, and then really do sort of engage with the team behind it, and equally with the investors in the ASCOR project. So first question. It's Victoria Vyong, and this is a technical few questions, so I'm going to fire through them. Probably the first one to Antonina. For the emissions pillar, for the emissions pathway pillar, do you also think about the credibility of commitments? So are the countries actually achieving their ambitions?
Thanks, Adam. This is a great question. Thank you for asking this. I think very much so we do look at credibility. The areas that you saw mapped out as contributing to implementation, the aim there is very much to give investors a better idea of how credible those targets are. If a country has a very ambitious medium-term or long-term target, but no policies in place that would cause mitigation outcomes, that is sort of an indication that that target is a bit less credible. The other area that I would point you to is the emissions trends section, where we don't just ask whether emissions are going down, we actually check if that rate of reduction is aligned with where they would need to be over the next few years to meet their own 2030 benchmarks. So that's built in other parts of the tool. So not within the target assessment, but in other parts of the tool, you can get a better idea of the credibility of those targets.
And how often will that emissions pathway be updated? Is that annually?
Yes, so all ASCOR assessments will be updated annually.
Excellent. And so whilst we've been on this call, I'm logging in, or whatever it is, from South Africa. So I've been looking at the South African trajectory against their NDC, against their pathway, and it's extremely helpful to get that insight for the dialogue we're having and intended to have with related to the bonds that we have for South Africa. So next question: how do you differentiate the fair share budget 1.5 degree and the national 1.5 degree budget? Johannes, is that for you?
Yeah, I can take that. So we use the fair share allocation to balance the 1.5 cost efficiency pathway. Maybe quickly step back, the 1.5 degree benchmarks are retrieved from a global cost-efficient benchmark, which is then harmonized but also downscaled via different methods, and you retrieve by that a national benchmark, which is though built upon cost efficiency. We complement this with the fair share allocation, where we take a global pathway and calculate different country weights. You can take different equity principles. We use the principle of equality, capability, but also historical responsibility to calculate a national weight, and by that then downscale this global pathway to retrieve a fair share allocation. So we have in the end 2 benchmarks which we can compare countries' target to.
Thank you very much. And well, picking up part of the comment from Herman as well, are there any considerations for biodiversity, and can you clarify how carbon credits are considered, especially if these are sold to other countries? And that's from Brian Carter.
Thank you for the question. I can take the point on biodiversity and then maybe hand over to Johannes to talk about offsets. The biodiversity question is very important. There are many ways that this synergizes with climate action. So the way that we do that is through the indicator that Herman mentioned specifically, which is the area, the percent of the territory of the country that is under protected area. And this practice can both reduce emissions and preserve emissions that are sequestered in forested areas or other ecosystems, but also can protect the biodiversity of a country. And we actually modified that indicator previously from being about forested area coverage to being about protected area coverage. And the reason for that is because through the feedback, we were told that there would be interest in making sure that we have indicators that are more, as much as possible, do have a bit of more of a synergy with biodiversity. And so looking only at forests, you would have a bit less of ecosystem diversity. Whereas when you look at protected areas, there's many different types of ecosystems that can fall under that. Just on the question of generally building a whole entire framework that would evaluate countries on how they manage the biodiversity crisis, I would say there is the need for potentially another framework to do that in the right way. ASCOR was built to do climate, and it was an early question amongst the project partners, should we also make this about biodiversity? And there was agreement that although it's important and we should include it to the extent that it synergizes with climate challenges, it does need and deserve its own framework and its own dedicated evaluation.
Maybe I can just quickly touch base upon carbon credits. We had lots of discussion around carbon credits, Article 6, offsets. In the end, we had a certain scope of the framework, of course, like we had to limit the number of areas and indicators. And regarding carbon credits, it was a question like, how can we build an indicator which can be valid for every country? So we integrated this in EP23 within 2030 targets and ask if a country is transparent on the potential usage of carbon credits. We would have loved to go more into detail, but like to differentiate countries into buyers and sellers would probably stand against market principles. So we ask specifically for transparency regarding carbon credits within the 2030 targets area.
Great. So we're going to do a few more technical ones before we have some broader questions. So turning to Isaac Ray Delgado from Santander Asset Management. How is the import-export of products emissions is adjusted in the methodology? Is there expected feasible to include it? Is it feasible to include it? Antonina or Johannes?
Thanks. Yeah, very briefly, I'll keep it brief, but we do assess consumption-based emissions as well as production-based emissions. You can find both of these. You can toggle through them when you come to a country webpage and look at their trends in consumption-based emissions and production-based emissions. For consumption-based emissions, as you mentioned, it is very complex to measure that. We rely on the OECD's data set, and they use input-output tables to make those assessments and those calculations. So we draw on OECD. There's a downside, which is that the latest data available is from 2018, but we are monitoring in case there is more up-to-date data from an authoritative source over time.
Excellent. And turning to Murray Burt from DWS, for the policy sector transition policy assessment, will more detailed criteria indicators be added in the future? Murray always wants more.
Very briefly, I would say we will likely be developing the framework further over the next few years. This year is very much about scaling up the coverage. Then in 2025 or 2026, it could very much make sense to sort of rework the framework, expand it, focus on where policies have developed the most. So there is definitely scope for that.
So as I'm going to turn to some of our investor colleagues as well in a moment. Before I do, there's a number of questions in relation to whether the slides are going to be made available. Yes, they'll be sent out. This recording will be on the website, on the TPI Centre website, as well as the ASCOR website. There's a number of questions around engagement, and Alexandra and Herman, both question to you in terms of just to think about before I first of all go to my investor colleagues. What makes a good sovereign engagement from your perspective with a tool like this? How could it be different from the engagement you've had today? I know you reflected partly in terms of how that could happen, Alexandra, in your comments, but before you answer that, could I just ask perhaps Claudia, in terms of engagement, you're obviously involved in the work in relation to Australia, but how do we see that landscape evolving? Is there going to be a Climate Action 100 related to countries?
I think, thanks so much for the question, and a very good question, because obviously sovereign engagement has been lagging on the corporate side or the equity side. But I do think having now a framework available such as ASCOR, it should be evolving further, because now we can actually frame those questions and we have the same indicators for each country assuming within the same income group. And those can be expanded, and that helps investors and I guess issuers as well, that we're all talking about the same indicator. The indicators have been assessed independently and will be reviewed on an annual basis on a country-specific side, but also having this concept of fair share principle applied helps also to compare countries against their peers and raises more questions. And that's been very helpful on the collaborative engagement side in the case of Australia, which I would very much expect to expand into other countries going forward. But in interest of time, I'll pass it on to the issuers as well to hear their comments.
Yes, please, Alexandra or Herman, if you have any thoughts in relation to what good looks like and what would be helpful.
I think generally a good dialogue is always one where you show transparently what is important and what really influences your decision making, and what you should therefore transport. Also, I've seen a lot of questions going into that direction as well, from a debt manager to actual politicians and those who make policies for us, for the whole country. So it's I mean, these things are a little more complex for us as sovereign debt managers who have a dialogue with investors, of course, who are, I think, in some cases still kind of getting used to getting into more dialogue with investors, especially not just regarding our issuance program and so on, but also regarding the profile of the whole issue of the whole country, which is obviously not really in our scope or our hand as a debt management office, and we have to transport those messages to those who can make decisions and can make changes. And yeah, I think we're kind of we're those for you who can transport the message. If not, if you don't want to transport the message in a way that where you tell us, I won't give you capital unless you do such and such. So if you want to be less dramatic and just get a message across, I think we're the ones who can do that. And I think the ASCOR tool makes it easier for us because it's not hearsay, so to say. It's not us talking to investors and transporting the message, saying, we've heard a lot that, you know, there's a lot of critique, for example, for Germany regarding the late exit from coal. It's transparent, it's public, it's a fact. So it's supported by a lot of institutional investors, and therefore it's easier for us to transport why this is an important topic to deal with, also regarding our capital market entrance as a country.
Thank you. That's really helpful. And Herman, any reflections from you?
Yes, well, in our case, as we were putting together the structure for the SLBs, we had quite extensive interactions with a lot of investors, almost 100, I would say, over the year and a half. And that was because the product itself was new. We were explicitly incorporating Paris Agreement commitments inside a sovereign global bond, but also because for the first time we were asking investors to accept a product with a potential step down. Now, given that engagement, I can tell you 2 or 3 ways in which the ASCOR tool has already been very useful for us. The first one is back in May of last year, we had to publish our first SSLB annual report. It was the first time that a sovereign was publishing an annual report for a sustainability-linked bond, and we had to update the performance of the KPIs through the year 2021. And as you know, the annual report follows the IGMA principles, which are voluntary guidelines on post-issue disclosure. Yet beyond those requirements, at the Ministry of Finance, we engage with key stakeholders to factor in what were the market expectations on the report's content. And one of the key stakeholders were our colleagues at ASCOR, and we had a lot of back and forth on what they thought would be a good content or investors would be expecting to see given the KPIs. So that helped us a lot in preparing in May 2023 our first report. And for the upcoming second annual report of the SLB in May 2024, there are some angles included in the framework that while they are not directly connected to the 2 KPIs we have, it would be important to cover them in our report. So that's going to be also useful, because going forward, I expect that this tool will anchor a lot of our interactions with investors on progress towards meeting our targets. The second way it has helped us is, as you can imagine, putting together this bond, and given the number of ministries involved, there was it requires a lot of coordination, as I mentioned, and a lot of back and forth. And you shouldn't underestimate the time it takes, because sometimes you get lost in translation, because ministries can be talking different languages. No, Ministry of Finance looking at it from the side of international finance, the Ministry of Environment from the side of climate data. So when we were fielding the questions for this project and the back and forth on the feedback, that required a lot of interaction from us with the Ministry of Environment on how should we answer this question, where is this data available, how can we track progress. So it helped us also to continue to galvanize this coordination within the public sector. So those are the 2 key areas where it has been helpful so far.
Brilliant. Well, look, thank you for that, and really appreciate that. And I think one of the key sort of things that I think this tool is going to be able to do is to really enable dialogue about how do we help enable countries to achieve their objectives. And it provides a sort of level playing field in terms of assessment that investors can use to be able to sort of have that very pragmatic conversation from a constructive perspective. And I think that's a really helpful way of basing a lot of the investor engagement that could now ensue. There's a number of questions around emissions and also common but differentiated. And Antonina and Johannes, do feel free to answer some of those in the chat written function given the time. But I'm going to go to Reese Petheram's question, which is, first of all, to thank you for putting this together. But the principle of common but differentiated responsibility seems well addressed across countries, but it's not as apparent within country assessments. Were there any constraints in arriving at a measure to assess efforts to address poverty, vulnerability capabilities as a co-benefit of climate mitigation action, gosh, this is a very long sentence, beyond traditional just transition considerations, or was this not a priority? Antonina, that's one I'm going to direct at you to begin with.
Yeah, sounds great. No, it's a very good question. I would say first that in the early stages when we were developing the investor expectations, there was a very strong desire from the investor partners to ensure that some level of just transition and social justice would be included in the framework. As you mentioned, because the ASCOR tool is really about climate, we needed to focus on how really those places. So it's kind of the same answer as the biodiversity question. We look at the social areas that synergize and overlap directly with climate action. So we have the just transition indicators. We look at distributional impacts of carbon pricing. Has the country assessed that and checked how maybe certain more vulnerable citizens will be affected by carbon pricing, for example. Within our adaptation indicators, adaptation plans can be assessed and monitored in the sense of how do they especially target more vulnerable people within the country. So there are ways that it's woven in, but there isn't an explicit assessment of poverty in general terms. I would say the only just transition indicator we have, which is very much about the foundations of just transition and isn't very much related to climate change. And I will plug again that this was a result of the consultation and an important desire to see this reflected in the tool. And that is the indicator, the first indicator in just transition, which looks at whether the country has ratified a majority of fundamental human rights and labor rights conventions. So ratification is not the same as signing. It's a quite robust way for countries to demonstrate that they're integrating those international conventions into their domestic laws. So that's how we've addressed that broad question of human rights and social justice.
Excellent. Conscious we've got about seven or 8 minutes left of questions, so we're going to have punchy answers. We're going into the punchy round. Ollie King's put a few from JP Morgan. The one I'm going to choose is: do the absolute emissions calculations include all emissions within the sovereign's boundaries, including overseas territories and maritime, i.e. are foreign corporate-owned facilities counted alongside state-owned enterprises in the calculations?
The quick answer is we use the PRIMAP country reported data for emissions. So my understanding is it's territorial emissions. It's what's within the territory of the country, but you can check on the PRIMAP tool exactly what's included.
Yes, and also the emissions uploaded to UNFCCC repository are also territorial, to define that way.
Excellent. This one I'm going to, there's a question from Lenny, an MBA student in the US. Thank you for joining us, Lenny. And I think this probably is going to go to Victoria or Esther. What about adding a call to action for interested investors, connections to country-specific bonds issued or to be issued? Or is that beyond the scope of this, or appropriate, I would add? So, sorry, I'm not trying to guide you there, but anyway, Victoria or Esther?
Yeah, I'll make it brief. Look, I think given the amount of interest in this tool, that would be a very natural step forwards. At present, the ASCOR project was to create this tool, get it off the ground and get people talking about it and using it. But, you know, if people want to see that moving forwards, that's definitely something that we'd like to hear about. Claudia, I know you've already been doing a lot of work with the Australian government. So I'd probably say, you know, perhaps as I watch this space. Esther, I don't know if you have any other thoughts, or Claudia.
Yeah, I think on the KPIs are going to be quite useful going forward to creating more innovative products. And I think, as Herman already noted, it has been quite useful as well for those products going forward as well, because each country will be different. And I think that's quite useful for being able to choose those different KPIs. Which are suitable as well.
Yeah, I would just add, you know, just the whole ASCOR presence, existence come to the current state is to have a definition in place, is to have a standard, and that is already underlining the further development of various sustainable products, but we cannot have like one blanket fits all, just because different country has different NCDs, and they also have different different areas that they would like to improve on. So it would just be also unfair to have a one particular KPI to be applied to the same group of countries.
So the next question, and I'm not sure if it's a question, but I'm going to interpret it as a question rather than a statement of what USS Investment Management are doing, but it's Thomas Phillip. Are you in discussion with index providers to incorporate ASCOR metrics methodology for the sovereign bond indices, rather than perhaps a statement that USS are doing that? If I've interpreted that incorrectly, please do put that in the chat. But just to say that, look, I'm going to answer that one because we've made ASCOR available and we've tried to make it as accessible as possible. We know that there's a number of interested providers, index providers, that are actively looking at how this can be integrated. We would encourage people to really sort of consider the ways that they can use ASCOR to help inform their different approaches. And if anybody has any questions in relation to that, then get in touch with ASCOR and the team here. We want this to be practical, usable, and clearly the more integration into the market, the better. There's obviously data licensing issues. We've tried to be very clear and transparent around that. And so just be conscious of those elements. It is free to use. I think when you get into the product space, it's worth just reading and checking those elements. But we're very keen to have those, see those discussions evolve. Unless any of my colleagues want to add anything to that, I'm going to move on to, yes, a question from Clémence Galopin, ESG analyst for Ethos Foundation, regarding the current coverage of ASCOR tool. While I understood that the focus was put on the most impacting countries, the coverage relative to the sovereign bond market raises a question. Indeed, I'm wondering if the limited coverage limits the opportunities for investing in sovereign bonds of less impacting issuers that are smaller, less impacting in terms of emissions would, in principle, be more vulnerable to climate change and potentially benefit more from additional capital allocation for those increased risks. What's your view on that? I would ask Antonina from the sort of the technical perspective in terms of how we selected this first tranche of countries, and then if any of my investor colleagues wish to comment on that.
Yes. Happy to. I would say the first set of 25 countries were actually purposefully chosen to get a cross-section of income levels, emissions levels, reliance on fossil fuels, and policymaking systems. And the aim there was actually to get a high sort of diversity in the sample so that we could test out the framework. That's why this is sort of the pilot group of the first 25 countries, to see that and to ensure that we build a framework that is applicable across this wide range of country circumstances. This coming year, we plan to publish 70 country assessments, and those have been selected for now based on inclusion in the largest sovereign bond indices, and prioritizing those with a higher weight. The idea here is just prioritize usability, and very much so one of the aims of the engagement is to encourage emissions reductions amongst those countries that are high impact. It does raise an important point, this comment about countries that are lower emitters and how they need a higher access to capital. Perhaps there are other tools that can complement that, but we do still assess lower middle income countries as part of the World Bank categories. And over time, we will cover the whole investable market. That is the target.
Fantastic. Well, look, I was overambitious in promising answers to all questions, although I think we've covered a good 20 odd questions by one degree or another. We will look to try and distill answers to those questions that we couldn't answer and have some more generic responses that cover all of those. Can I just say thank you to everybody that has worked on the ASCOR project. This has been a huge undertaking over a couple of years. I'm quite I mean, it's incredible to think where we've got to in this time that we've done. Obviously, the challenge is enormous. And I think the fact that we've been able to have inputs from governments in the design in terms of what's actually helpful and going to be constructive in the dialogues that investors can have with governments has been hugely informative to us from a technical perspective, but also in ensuring that ASCOR is actually relevant and does something both for issuers as well as those that in the investment community. I do think that it is a really important contribution to how we as investors understand climate risks and opportunities. And we do underline that it is to really give that sort of comprehensive picture to enable us to then have those dialogues, to embed that into our own understandings individually in our individual funds, and to really ensure that we can play a role in the way that we engage and steward assets, but also, I think, really support the transition in countries. So I particularly want to say thank you to Victoria Barron. She has been an enormous champion and energy behind this, and relentless, quite frankly. You should see the number of WhatsApp messages we all receive, and also to Claudia and Esther, because they have been tremendous in supporting us as a sort of quad chairs of the initiative. But behind that, we've had a steering committee of investors and all the investor networks as well, and a number of funds that really came in the first of this concept to say, yeah, we're going to work with you, we're going to support this, we're going to put our expertise, we're going to pool it because we know that the market needs it, rather than we create our own thing and we just sort of go off on a tangent. We're going to create something that's transparent, public, available to everyone, and really for the common good. And I do appreciate all of those that have contributed. And last but not least, the academic team, because quite frankly, unless there's an independent academic rigor at the heart of these things, I think we will always have a challenge, and they've done a tremendous job, and we've really appreciated their expertise and the disciplines that they've brought to the project. So in particular, the two on this call that have spoken and have really pioneered a lot of this and taken the feedback and really sought to do that in a very robust and transparent way. So in terms of next steps, annual assessments as it stands, rising to 70 countries in 2024, and then more than 100 thereafter, and then really continued analytical reports from the team. And we remain open to taking that feedback, further enhancing the whole framework, and ultimately supporting collaborative sovereign engagement as well. So thank you all very much. Greatly appreciate the time, and particularly from our colleagues from Germany and Uruguay, and everybody that has joined us today. And we look forward to keeping in touch with you. Thank you.